Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. It is Easter Saturday, 19th of April 2025. I'm hoping your Saturday has been brilliant so far and your long weekend even better. My Saturday's been okay, apart from a short venture to the supermarket. Now, I typically go to the local Woolies every single day because I don't do a big shop at all. I hate big shops. And I tend to go between about 7 and 9 a.m. when supermarkets tend to be their quietest. I've also heard that Friday nights tend to be fairly quiet at supermarkets as well. Now, the only problem about going that early, sometimes some of the goods haven't been stocked, particularly from the bakery, which is so weird. I think the whole point of a bakery is to have, the baked goods, like the hot cross buns, out as soon as you open. But for some reason, local Woolies tend to put their hot cross buns out about 10 a.m., maybe to get the lunch rush. I have no idea. Now, I was thinking about skipping my little trip to the supermarket this morning because I did have a bad feeling that it was going to be really busy because it's a day after the supermarkets are closed, and those days tend to be really busy. And yep, absolute pandemonium. I haven't seen it this busy. Well, the only times I've seen it this busy in the past have been around Christmas time when people are panicking, particularly just before Christmas. People are panicking, they have to buy stuff really quickly. And so, for some reason, maybe people weren't planning that yesterday supermarkets were going to be closed because there was a rush. And typically, that rush happens just after it opens. Now, I would have preferred if the Woolies opened at 7 a.m. this morning, so we didn't have that massive rush, that huge rush at 9 a.m., but there was. And that was my mistake. I went just after it opened, about 9:15 a.m. Okay, lesson learned, although I knew it might be like that and I just ignored it. I could have gone tomorrow. Could have gone tomorrow, but I was thinking maybe I can go today and not go tomorrow. Anyway, let's have a look at some of your questions and comments. And the first one is just a comment, a pretty silly comment, in my opinion, from Grointastic 4242. LOL, if you work from home, you really aren't needed at work. Yeah, I think that's the point. If you can do your job at home, then why do you have to go to the office? It doesn't make sense. That's the whole point. AI will take your jobs. I don't know where the relationship is there. Because if you can do your job at home and the office, just because you're being forced to go to the office doesn't mean AI can't take your job anyway. So I don't see the whole point of this little comment, but I just want to talk about it. Now, the whole reason we go into an office in the past is because there was a technology gap between what we could do in the office and what we can do at home. Now, the office is a relatively new thing, maybe 100 years ago, 120 years ago. So this is a relatively new thing in human history. And that technology gap has been bridged, completely bridged. And it's a safe bridge, a solid bridge. I can do everything that I used to do in the office at home. In fact, I would say what I can do at home is better than what I can do in the office for a few reasons. And one of those reasons is, in my opinion, the office is a hostile work environment, not conducive to productivity or efficiency. The main reason behind that is I have complete control about distractions at home versus the office. And a lot of times when I have gone to the office in the last few years, I get so stressed out because of the distractions, continuing distractions, which I have complete control at home. So that's the main thing. I am so much more productive at home because of that. So that has been an absolute eye-opener, not only for myself, but a lot of people out there, that you are so much more productive at home. So you might be saying, well, what about collaboration? That sort of thing. Absolute BS. Absolute BS. At the office, very little collaboration. In fact, most of the talk between colleagues is about, oh, how was your weekend? Oh, what about this and that? Oh, how are your kids going? Very little collaboration. Maybe some offices do have collaboration, but very little of that happens at my office. So our jobs are one of the reasons I was attracted to the job I do is because it's very, what's the word? There's a word for it. It's, I forget what the word is, but you don't need to be in a team. You could do it yourself. I could do the whole job myself. So a 12-hour shift, I can do that whole 12-hour shift myself without talking to another person at all. And that's the attractive thing about what I do. Now, could my job be automated? Well, they've tried. They have tried to automate parts of my job, but the quality, that automation that IA has produced in the past has been absolutely crap. So it's a long way before my job is automated, but still I'm able to do it at home. Now, you probably are jealous because you're probably a mechanic or a teacher and you have to go somewhere to do your job. And I think that is not a really good argument. Just because you have to go somewhere to do this is sort of the excuse Elon Musk had for why he wanted everyone to go to the office, because some people had to go to the office to work or the manufacturing plant to work. So everyone should suffer because of that. But that's absolutely BS. Now, the main reason I think working from home is what is going to be the preferred option in the future. It's looking like that. You do have a bit of pushback from management. And I will say this, any manager that is pushing back, I'll say this, if there is a publicly listed company on the ASX, New York Stock Exchange, NASDAQ, and that management is telling their staff to go back to the office 5 days a week, that company is uninvestable. I'm going to say that again, uninvestable. And you will hear about management talking about being able to adapt to change. And this is an example where they can't adapt to change because this is a significant change to how we are working. So if they're forcing people back to work, back to the office 5 days a week, that is telling me, hey, they're micromanagers, it's all about power control, and they can't adapt to change. And that is not the sort of company I want to be invested in. So, yeah, I actually have looked at that. I have seen companies that have gone down that road, and I have said, put a label on them, not or uninvestable. There's other companies whose management have gone the completely opposite direction. Atlassian is a great one, and those are the sort of managers you want to work for. And the other thing is, those are the sort of managers, sort of companies that will get their pick of talent around the world, because that is the way most people want to work these days, who can work these days, who can work from home. Anyway, so much better productivity, much more efficient working from home, much better work and life balance, whatever you want to call that. So if you had the choice, and we have that choice, I have that choice, I'd much prefer to work from home than in an office. But AI will not take my job for many, many years, probably not for a decade. Anyway, so that's my little rant on this little comment, which I still don't understand. And by the way, there's every single job in the world can and most likely will be overtaken by automation. You name a job in the world that will not be automated, and I'll tell you, absolutely wrong. I actually asked this to colleagues at work a few years ago, and all these different professions were raised. Politicians, I said, no. In fact, if I had my way, politicians would be the first thing automated. Yep. Someone else said marriage counseling. Said no, that would be a perfect thing to automate. Perfect thing. As humans become more and more comfortable with automation, AI, yeah, you're going to see more and more jobs being automated, being overtaken by AI. So a really weird comment from Grointastic. I still don't understand. Yeah, if you work from home, you really aren't needed at work. Yeah, that's all point. That's all point. I think what they may be mentioning is you're not really needed at all, which is absolutely bizarre. Yeah, I think this is just a jealous comment from Grointastic. I'll give this a thumbs down. There we go, thumbs down. Okay, Forest Hill, 8462. Thanks, Kneppy. In a couple of videos earlier this year, you said MTM would be attractive below 20 cents. It's been below 20 since March, and the investor preso in April looked solid. Potential. I can't remember why I mentioned it might look attractive below 20. Was that just, I would say that's just a technical single. Oh, yeah, I would have probably stated that there was a really good rise, the share price, and if it pulled back to maybe 20 cents and bounces off 20, that would be attractive. It actually did bounce off 20 back in February, but that little bounce was not that strong. And Share price has been all over the place. In fact, share price did bounce off 12 cents pretty nicely, but I'd say 10 cents was more likely, although in saying that, it didn't happen. So saying it was the more likely support level didn't come to fruition. Now, I think MTM Critical Metals is more of a story stock. Am I right with that? So I do pay less attention to story stocks than other companies. And let me just confirm that. So they just released their appendice 5B, not 4C, on the 14th. And whenever I look at these sort of quarterly reports, the first thing I look at is any receipts. If they don't have receipts, it's still a story stock. Now, it doesn't mean the story won't play out in a very favorable way. And story stock. So I kind of remember what they mine. Let's have a look. Let's have a look at the about section. Do they have a about section? Or they have a company profile and advanced metal recovery technologies. Oh, now I'm sort of remembering this one. Sort of remembering this one. I do find, I remember thinking this company is a little bit better than the mining exploring companies because it's a little bit different. So advanced metal recovery technology. I thought this was, initially when I started this little section, that this was a mining exploring company, but I need to see proof of their business model before I get interested. Otherwise, the chart, we've had a nice bounce, but again, that could be just because oversold and just because of a little bit of more optimism in the market over the last few days, last week or so. So I'd like to see this bounce continue. But for me, this is the sort of company not for me just now. I need to see more proof. The other thing I always look at, of course, is volume. And we saw that really massive increase in volume in November last year. In fact, we started to see the increase in volume in August. And then we saw the volume expand into November. But since then, the volume has been retracting. So for me, that is not a good sign. I want to see the volume increasing. Now, we have seen a bit of a volume increase in the last few weeks, but I need to see that volume really expand. Okay, that's MTM, Critical Minerals, whatever. Oh, Rick Fillion, the mine in Guinea won't be an issue till it is productive in 2 years, they say, before it affects Australian exporters. Effects or effects? Effects. I think it's effects with an E. That is one or two words that are a lot of times confusing. And I always have to think about it for a long time sometimes. Anyway, and someone mentioned that Guinea has some of the most active volcanoes in the South Pacific, the wrong Guinea. And then someone did mention the Guinea, West Africa. There are 4 Guineas in the world. When I say Guineas, I mean countries with Guinea in the name. Those are Papua New Guinea. Now, New Guinea is a part of Indonesia, I believe. So Papua New Guinea, Guinea, Equatorial Guinea, and Guinea-Bissau. I tried to Google what is Guinea. I didn't get anything. Just Guinea was a currency. I thought maybe Guinea was Spanish for something. I did read at one point that Guinea might have been a group of people in that West Africa area, but there was no definitive explanation on where the word Guinea came from, except that we have 4 countries in the world that have the Guinea name in it. And so it's one of those countries. So is it in Guinea, Equatorial Guinea, or Guinea-Bissau? I'm assuming just Guinea. Anyway, so not productive in 2 years, but the market is forward-looking. The market is forward-looking, and the closer we get to they going into production, the more likely the market might get a little bit skittish. There is that chance. And even at that point, we might see iron ore prices go down in the expectation of iron ore supplies increasing. So unless we see a massive increase in demand, then because it's all supply demand driven, there's a chance that iron ore prices will start falling before they go into production. Okay, Rick Fillion also says, trust on tariffs. When a container lands in America, the importer pays the American government the importer sheet on the wholesale price, then we'll also add the tariff onto the retail price, increasing inflation. 100% true. So a lot of confusion about this during the election cycle because Trump was lying. Well, he was either lying or didn't know. He said that the other country pays the tariffs. No, you can't tax another country. You can't tax another country's citizens. Imagine if you could. Imagine if Australian could tax another citizen's countries, it would be taxing every country in the world and would be the richest. But then every other country could do that. So you can't tax the citizens of another country. This just doesn't how it works. But there was a lot of confusion, and I did actually listen and read and watch a lot of right-wing YouTube channels who were saying that, putting this false information out there that, oh, tariffs are great because then we're going to get all this money from China. No, that's not how the way it works. Rick Thelen is absolutely right. The tariff is paid at the shipping yard, the port, and all the importers have a big sheet of all the tariffs that they have to pay, and they pay the tariff. The importer pays the tariffs, and they pass the price on to the consumer. Yeah, that's how it works. Yeah, that's how it works. So tariffs are inflationary, and Just James Dean also mentions here, on the other hand, it's recessionary. Yes, it is. Well, so tariffs are. It's really weird because tariffs, in essence, are inflationary. That's an absolute truth. But the problem we're seeing now is because of a lot of uncertainty when it comes to tariffs, products are going to be tariffed. A lot of companies just don't know. How are we going to plan for the next year when we don't know what tariffs are going to be on us, what tariffs we're going to have to pay for all our supplies? That's the other thing I'm not sure the administration is thinking about. All these companies who build stuff, manufacture stuff in the United States have to pay tariffs on all these goods they bring into the country because America doesn't produce everything. A great example of that is coffee. So they get 99% of their coffee from other countries. And so coffee prices are going to go through the roof. I think they only grow coffee in Hawaii, but that's a very small amount. And do you think they'll be able to, develop and start growing their own coffee? No, it's going to take years and years. So anyway, on the other hand, it is recessionary. Well, we have seen this in the past that tariffs do lead to recessions, even Great Depressions. Well, I'll say that the Smoot-Hawley Tariff Act didn't lead to the Great Depression, but it definitely made it worse. So it would be really interesting if we had, if we could view into an alternative universe to see what happened in the Great Depression if Smoot-Hawley Tariff Act wasn't implemented, to see how bad the Great Depression was. Maybe it was nothing. Maybe it was a blimp. So there is a lot of debate about how much of an effect the Smoot-Hawley Tariff Act had on the Great Depression, but overall, the general feel among economists that it definitely made it worse. Definitely made it worse. So definitely it's recessionary, inflationary. But the thing about recessionaries or recessions is you usually see inflation fall because demand of products becomes less. So if we don't see inflation fall, we're going to get stagflation, which is horrible. And actually, yeah, Jerome is absolutely right. Now, what we are seeing from the Trump government is quite scary when it comes to democracy. I watched a video this morning saying democracy is under threat in the United States, particularly what is happening with this guy who was illegally exported or sent away to El Salvador. The court's saying to the government, you have to bring him back. You have to bring him back. You're in contempt of court if you don't, and the Trump government just ignoring it. So it's going to be really interesting to see what happens over the next few days, next week or so, because we are seeing possibly the destruction of democracy in the United States. There's even the thought that he's going to what was it? The 1807, what was it called? Act. What was it? 1807. Insurrection Act that he might evoke, is that the word? Evoke the 1807 Insurrection Act, within the next week, maybe a little bit longer than that. So federal law that empowers the President of the United States to nationally deploy the US military and to federalize the National Guard units of the individual states in specific circumstances, such as the suppression of civil disorder, of insurrection, and of armed rebellion. So there is this fear. In fact, here we go. It's in news articles right now. So this is out there. And this leads to more uncertainty about what might happen in the future, particularly over the next 3 years. So there is this fear that democracy is under threat in the United States at this point in time, right now, which is weird to think about. So thank you for that, Rick Thelian. Absolutely correct, Rick Thelian. VBE D666. Interesting 3 numbers there. Chosen for a reason. Hey Kneppy, do you consider Amcor to be defensive stock? Why I ask is because most of the packaging materials they sell is used for food and pharmaceuticals. They package the essentials for life. Regards, Ed. Your reasoning is absolutely spot on. I would call that sort of packaging company to be defensive, mostly, yeah, because if they are selling mostly for food and pharmaceuticals, defensive. Food is defensive. We all have to eat. Yeah, we all have to eat. I'm trying to think of someone who doesn't have to eat and they're dead. Yeah, so food is essential for life. Pharmaceuticals, I don't think pharmaceuticals is absolutely essential because there are some pharmaceuticals that people don't need to survive, but in the most part, yeah, pharmaceuticals are essential for life as well. So I think the reasoning here that Amcor is defensive is absolutely right. I want to see if there's any Amcor is defensive. I wonder if AI Overview will say anything about this. Yes, Amcor is generally considered a defensive company. It's a global packaging manufacturing with a single focus on sectors like food, beverage, healthcare, and home and personal care, which tend to be less affected by economic downturns. And the way to figure out if something is defensive is look at price elasticity or price inelasticity. So yeah, the static quantity of good service when it price changes. So if a company is able to raise a price of something and the demand doesn't change, then it's inelastic, and that means they might put the price up even like water. If someone was selling water, which of course would be an absolute ridiculous. Well, actually, they do sell water, but if you can only buy water, if you can't just get water from the tap, well, I suppose even that you do have to buy for it or you pay for it. But just imagine if someone was selling air and you had to buy air, oxygen. Someone could just, whoever was selling air could just put the price up if there's no competition, continually put some price up and people will still pay for it because it's essential for life. Yeah. Anyway, so this goes back to probably the last time I thought about price elasticity and inelasticity was probably 30 years ago. Yeah, that's it. Just shows you sometimes you can learn something and it still sticks with you. I don't remember the formula, but yeah, anyway. So great thinking from, why does Studio do this? So great thinking from VBD666. I'm just thinking about those 3 numbers there, 666. I used to live in Taree at 66 Commerce Street. I'm very thankful it was not 666. Okay, Paul on Mayo. Hi, Kneppy. I watched Money Time Machine on YouTube. Real crush, not here yet. On his chart analysis, he thinks the market has a ways to fall, 30 to 55% off highs. Interesting to watch. I tend to agree as the effect on market confidence and companies. Again, is this effect or effect? As the effect, I still have to think about it. I tend to agree as the effect. I think it's E again. Effect on market confidence and companies' earnings due to Trump's policies start coming in. It's really funny that Trump was gloating about the lower CPI numbers, but that was in the past. That was before all the tariff stuff. So he's looking at the past, not realizing that, yeah, Jerome Powell is absolutely right. There is definitely evidence that we're going to see a bit of a bump in inflation coming up. I would never try to predict which way the market's going to go. I'm not smart enough. And it could fall another 30 to 55%. It could definitely fall another 30 to 55%. It all depends on what sort of slowdown we have. Now, there are some people who believe very little chance we're going into a recession. June being low, still thinks very low chance we're going into a recession. I think that's a little bit too optimistic. And there's some people who believe, and they've been believing this over during the last 20 years, that there's a 100% chance we're going into a recession in the next one day or 1 week or whatever. Stephen Van Metre. His channel is awesome. I love watching his videos because he's complete opposite of me. Stephen Van Metre. So he's an ultra bear. YouTube. You can just see by his video titles. And the comments he gets on his videos are just, I think a lot of people watching his videos are just like me. It's coming. Philadelphia's collapse sparks panic. This is just the beginning. Canada's collapse begins. A global catastrophe imminent. New York just collapsed. Beijing's nightmare strikes. China's collapse nears. Get out now. Bank of America warns you're about to lose 30% of your money. I warned you, Trump's latest move won't stop the liquidity crisis. Now, these videos have been going on for ever since I started watching these videos about 5 years ago. Anyway, so he seems to be an ultra bear. But getting a different point of view is really good because you don't want to be stuck in one point of view because you're going to be fairly biased at that point. So you always want different points of view, definitely points of view that are complete opposite to your own. So I'd never say that the market is going to crash 30 to 55% because you could be wrong. You could be wrong, but he could be right, or Money Time Machine could be right. And I do think there is a threat of recession, even a depression, depending on what happens in the United States. And that's the whole reason there's a lot of uncertainty in the world right now is because of this Trump administration. You just don't know what they're going to do. And again, there is a threat to democracy in that country right now. And if that threat looks like it's becoming more and more real, you will see the stock market absolutely plummet. Okay, I already answered that one. Just James Dean says, did you say you pay for ChatGPT? I do. Don't know where I pay it through. Anyway, Google's Gemini is free. I have a feeling AI will be the next email. Now, the reason I do pay for ChatGPT is originally there was only so much you could do until it stopped you from doing anything more. And I do a lot of stuff in ChatGPT, totally worth the money. And now it remembers all my previous chats. So I will chat to ChatGPT right now, and it would know exactly what I want and what I'm doing and the road I want it to go down. It really helps me. It helps me so much. I don't incorporate it into my videos, but I'm thinking of doing it. Because it just helps so much. So I use ChatGPT mostly when it comes to doing other stuff like researching other topics, non-investing topics. But I've started to look at ChatGPT when it comes to investing as well. I don't like where it's at right now. I think I can do a better job than it. But I just asked ChatGPT in regards to return on equity and the problems with return on equity and why some companies, even though they have a high return on equity, can't grow their revenue. And it gave me a really good answer and some things that I didn't think about. So ChatGPT, I think, is a pretty good. I haven't really looked at other AI thingies, and I do use Google's Gemini a lot too. But he also says, I have a feeling AI will be the next email, free for all. Yeah, I think that's eventually where it's going to go, free for all. DS, I can't even read. I maybe need glasses. There was a H there, but DS HW 5cc. Is that like an engine, 5cc's? Was there a band called 5cc's? Band called 5cc. 10cc. There you go. Close. 10cc's. I knew there was a band with cc's in it, but yeah, anyway. Soul, Washington H. Soul Patterson, or Soul Pats, or Soul Breakout, been range bound for nearly 12 months. Let's have a look at Washington H. Soul Patterson, or I'll just say Soul Pats from now on. Let's have a look. Have a look at the weekly chart first. I would consider this company to be high quality. If someone said this is in their portfolio for the long term, I'd say, yep. I would say, thumbs up. I'm not a big fan of some of the companies they've invested in, but if someone, and I can't give advice, I cannot give advice. If someone asked me, should I buy this ASX200 ETF or Soul Patterson, I'd probably say Soul Patterson. Yeah, I'd still prefer individual stock picking, but this is the chart for Soul Pats over the last, we'll go 20 years. It has telltale signs of a high-quality company just by looking at the chart. When the share price falls below 200-week moving average, is a great time to buy this company. It's happened 1, 2, 3, 4, 5, 6, 7 times in the past 20 years. The most recent was in 2022, and I nearly bought some shares at that point. Yeah, nearly bought some shares when it did that without even knowing this Charlie Munger rule. Yeah, so I saw the share price dip and I went, "Ooh, now's the time to buy some Soul Patts shares." Range bounding over the past, what's that, year, 2 years? What did you say? 12 months? So let's have a look at the daily chart, and it looks like it has potentially broken out. Look at that. It really wants to break out. On the cusp of breaking out. And yeah, it looks pretty good. Looks pretty good. Yeah, so there's nothing to disagree with when it comes to DS, HW5CC. Sol Patterson looks like it is breaking out. VBE D666 does mention something interesting here. I like how you track the quarterly sales turnover of stocks to track peak trends. Do you factor in inflation? If sales are just going up by inflation rate, then sales are not really going up. It's a really good point here. So before the last few years, you didn't really need to take into account inflation because inflation was really low. But over the last few years, and one of the reasons why I need to see better than 5% growth rate in sales is because of inflation. Now, I do prefer 10% because companies who can't grow their revenue right now, they're going backwards because of inflation. So this is a really good point from VBE. You do sort of, in a way, have to factor in inflation. And it's a reason why I'm now looking, well, I've always looked at revenue growth, but I want a little bit higher revenue growth because of inflation. And if a company can't grow the revenue, that is a massive red flag for me, particularly in these times when there is a bit of inflation. Then, in fact, that is telling me they have no pricing power, very little pricing power, and possibly the company's going backwards. So very good point from VBE D66. I wish I just mentioned that before. Jazz and Tails says Titomic, massive trade after close today. Okay, so was this Friday? Oh, that was Wednesday. 37 million shares. So that's $9 million worth. So let's have a look at Titomic. So this would have been, so we can't see this trade now in CommSec because it's 1 day late. But we can see the trade history. And there it is. Yeah, the 15th. So that was on the Tuesday. 47 million shares traded on the day. Some big volume coming through. So someone bought at 25 cents. Share price has pulled back. This could be a buy the dip or buy the pullback situation with Titomic. And I don't know who bought some shares. In fact, we could have maybe a look. Announcements. Becoming a substantial holder. Was it this collaboration organization? I wonder if this has it in. No. So why is there a... How many shares were traded? Let's have a look again. 37 million. Initial substantial holder. They now have, this company or Maybank Securities has 100 million shares, so 7.56. I'm wondering if they did buy 37 million to increase their holding, and that pushed them above 5%. So now they have to put this in. So there is that possibility. We also saw ceasing to be substantial holder. I wonder if they sold. I wonder if there was sort of like a cross trade. There's definitely a possibility of a cross trade here from one big fund manager to the next. So that's interesting in itself. Anyway, no idea, but if we have a look at the chart for Titomic, you're definitely going to see a spike in volume. There it is, and that's exactly what I'm looking for. So this could have been a buy the dip situation for Titomic, and if we continue to see some really big volume coming through, that's a really good sign. So a nice chart for Titomic. Not there about thinking about buying shares in Titomic. I just need to see proof of concept. And when I say proof of concept, I need to see the company hitting or about to hit that inflection point. They're very close, if I remember correctly, very close, but they're not quite there just yet. So typically I look at the Appendix 4C or 5B for inflection points, and I want to see at least a couple of quarters before I say that. Oh, they're still a little bit far off. Yeah, $5.1 or $5.2 million in operating cash burn. I think it was the previous quarter they were very close. So anyway, I'm still not there with Titomic, and there is it is richly valued in my opinion. So there's a lot of potential already priced in. Yeah, market cap is almost $300 million. Okay, Scott, II, 9RB or 119RB. No, it's probably I. Cheers, Kneppy. I can't help but feel that the golds have become a crowd trade or crowded trade. I'm keen to see what Gem does for the rest of the week, month, and further into this year's likely credit easing period, especially if unemployment reigns as low as it has been trundling for the last 12 months. Gem is at G8 Education. What about gold as a crowded trade? Everyone's talking about it. And I know there are some contrarians out there who love to go against the crowd, and this could be it. But we've been hearing gold being talked about and bullish. People have been talking bullishness. People have been bullish on gold for quite a while, and it keeps going up. So I started really paying attention to gold back in, it would have been on the breakout back in March 2024. So it's about a year ago, just over a year ago. I can't believe that was just over a year ago. It's gone up so much since then. It's gone up 50% since then. Yep, it has. Probably one concern, if you do have a look at the daily chart, the price of gold is well above the 200-day moving average. So it is primed for a bit of a pullback. Very primed for a pullback. So I would say there's a little bit too much exuberance in gold right now, and it is primed for a pullback. So I probably wouldn't be buying gold companies right now. And Gem, so this is G8 Education. I don't know, so they own daycare centers. And this is the daily chart. I don't really look at this company at all. So this is their weekly chart. This was definitely a stock in favor on the stock market back in 2012 to 2014. I still remember that period. They were very acquisitive back then, buying lots and lots of childcare centres. And then eventually, if I remember correctly, the price they were paying for childcare centres was increasing to the point where it wasn't worth it. And that is a problem for these type of companies, the roll-up companies. At some point, they get to the point where there's no point buying anything else. And that's when usually the valuation of the company craters. And G8 Education share price has dropped from $5.20 down to $1.26. Have a look at the daily chart. Not that keen this yet. So you're talking about G8 Education. Anyway, maybe it's something else. What else is there that has GEM? Goldman Sachs, Active Beta Emerging Markets Equity ETF, Gemfields Group on the London Stock Exchange, Goldman Sachs. So you're talking about Goldman Sachs here? In fact, Goldman Sachs would be GS. Yeah, Goldman Sachs is GS, the main company, Goldman Sachs Group. Okay, so maybe it's gone completely over my head. Maybe Gem is something else. Awesome, AKA. Hey, Kneppy, would you mind looking at Kogan Group? With the tariff war and acquisition of Mighty Ape, growth is yet to accelerate. Kogan. Let's have a look at Kogan. This one has been, I'm just going to have a look at the chart for Kogan. I have a feeling share price has dropped. Yeah, share price did drop a fair bit. That's the daily chart. It looked a little bit promising not that long ago, back in December. It looked like it was trying to go on a run and then it cratered. So really cratered on some news in January. Share price has fallen to like $4. If you have a look at the weekly chart, and you'll notice the share price is just all over the place. Yeah, look at that. So very much a beneficiary of COVID-19. People staying at home, buying from Kogan. Share price went all the way up to $25 and then fell all the way back down to $3 because one of the problems they had is they built up the inventory way too much because they thought the good times were going to continue. And I even know some experts who thought the good times were going to continue for companies like Kogan, but people wanted to get out. People wanted to get out from their homes and start buying from actual stores, not from online stores. I would say at this point, a really good support level for Kogan is around $2.50 to $3. Share price now $4.34, so it's a little bit off from that. Will Kogan benefit from tariffs? And the other thing is that Mighty Ape, they made that acquisition quite a few years ago, and it really hasn't done much, has it? Will Kogan benefit from the tariff? Well, I don't have no idea. I haven't really thought about Kogan and tariffs. Did they actually mention anything about tariffs in any sort of announcement? Oh, they're doing a share buyback. There you go. So if they're doing a share buyback, they should be thinking that the company is undervalued. Anyway, I don't know. Will Kogan benefit? My biggest problem with Kogan is I bought something from Kogan many years ago, and now I just buy stuff from Amazon. It's just so much better. That's my own opinion, and that is probably my biggest. Now, some might say there's room for a few people or a few companies in this space, but I just get everything from Amazon now. Yeah, I haven't even had a look at Kogan. Anyway, so that's just me. Jan Tierkabel, ex-Tian Turkable, could you have a look at critical metals subject to China trade sanctions? Antimony LRV seems to be ready for a breakout. I actually don't mind this space. So yeah, space, but it's still a bit of a story. You're still relying on the story playing out, how it might play out. That's my only big concern when it comes to this area. It's all based off a story, and who knows which way the story is going to go. And I just don't like mining companies. I just don't like mining companies as long-term holds. I'll definitely trade mining companies, but mining companies, they're so reliant on the price of the underlying commodity, and also reliant on governments around the world, supply demand of different commodities. So a lot of times, companies or mining companies' success is critical. I'm sorry to use that word. Is critical on other factors, not related to the company itself. Now, on occasion, you'll get a really good management team who can grow a mining company over a longer period of time. Northern Star is a great example of that. But who knows what's going to happen when it comes to critical metals space? Maybe China and the United States will get together, do a deal when it comes to critical metals, and I think critical mineral prices will then drop like a rock. Anyway, so that's just my thoughts. And also, a lot of these governments know that these are critical metals, minerals, whatever, and they are putting a lot of money into that area. And if we do see more mining companies mining these critical metals outside of China, maybe the supply will increase to the point where the price will fall. Yeah, so there's a lot of different factors at play. So I don't really get caught up in this sort of thematic just because of that. Now, if you look at Larvotto's resources share price or chart, it's a pretty nice looking chart. So this is a great looking chart. Yeah, there's nothing else to say. Great looking chart, but markup of this company is, what is it, 355.7 million. I would assume it's still a bit of a story stock. They're don't have any any receipts or revenue just yet. So you're still relying on this project, Hillgrove long lead equipment and project update. And even then, if they do get into production, how successful is it going to be? There's a lot of things that can go wrong. So this is one of the reasons why I try to or tend to trade these sort of things, because things can go wrong. And this has been a really good trade since August of last year. You could have bought on a breakout. So the breakout for Larvotto was really on the 16th of August. And you could have bought the next day when it went up another 33% at about 22 cents. And it's quadrupled since then. And this chart looks fine. This chart looks good. It has all the telltale signs of an uptrend. So rapid rise, then a drop, pullback, rise, pullback, rise, pullback, rise, pullback. Anyway, so that's Larvotto Resources. Probably my biggest issue would be we just don't know what's going to happen in the future when it comes to critical metals. There could be a deal. We just don't. The deal could be tomorrow, it could be next week, it could be 5 months from now, it could be a year from now. We just don't know, and that will affect that space. Scott 119RB also says or asks, any thoughts on steel manufacturing? I have zero thoughts on steel manufacturing. I've never really thought about it. I'll be honest with you. I've never really thought about steel manufacturing. So I've traded steel companies before, like Bluescope Steel, and I'm pretty sure Bluescope still have operations in the United States, so they might benefit from steel manufacturing or tariffs. Not steel manufacturing, they might benefit from tariffs. Now, I noticed the share price popped up when they released results on the 17th of February. That looked like it could have been a breakout, but that breakout failed fairly quickly. And the share price pulled all the way back down to the lows we saw just before that. So the chart doesn't, the daily chart doesn't look good. Weekly chart, nah. In fact, what I usually do is when I look at the weekly chart, I like to look at the 200-week moving average. Now, funny enough, if you ignore before 2016, from about 2016 to now, this does have the signs of a high-quality company because you buy shares in this company when the share price pulls back below the 200-week moving average. But then you're also ignoring what happened, prior to 2016. Yes, look what happened then. And I don't know what happened with Bluescope still then. I wasn't following the company at that point in time. There's also Bisalloy still, which is BIS. And if you have a look at the weekly chart for this one, yeah, this is sort of similar than Bluescope still has a hallmarks from 2017 of a high quality company. Buy it when it dips below the 200-week moving average. Share price has pulled back almost at 200-week moving average recently. But for me, I would say that steel manufacturing would not be high quality companies just because I would also say these companies would be too correlated to the China economy. So if something bad happens to the China economy, these companies will be negatively affected. You could say that about a lot of companies, though. If this particular economy is doing something, it's gone through a depression or recession, they're going to perform badly. But anyway, that's how I look at these companies. Not high quality, but maybe quasi-high quality, maybe since 2016. Just James Ends asked, and also got a heart here. Why do you have a heart? Received one of the highest number of hearts from you. Oh, I didn't know that. So what I've been doing, I've been putting hearts on, putting them off, just so I know when I'm recording this video which ones or which comments to answer, because I can filter by I responded. And for some reason, when I put a heart on your comment or question, it's like I responded. It just makes me going through or filtering all your questions and comments much easier. So anyway, did you end up getting APA you were thinking about? Yes, I did buy some APA. So I did buy some APA. It was a good chart. It was a nice chart. And the chart still looks pretty good for APA. This is a beautiful looking chart. I'll go back to my daily chart moving averages. Yep. So that's APA. I also have bought since then NUF or New Farm, Karoon, NIB, Challenger, and Zip. So Challenger's doing pretty good. New Farm, can't remember New Farm. Oh, it did dip a little bit. Karoon dipped a bit, and NIB, yeah, NIB looks good as well. So by far my favourite of my most recent purchases are APA Group and NIB Holdings. And funnily enough, both of those had the trend killer event. Did New Farm have a trend? No, it didn't. So both the best performing recent buys I had were after a trend killer event. Gives more credence to trend killers. And I'm hoping the same thing with Zip. Now, it's not my favorite type of trend killer, but they did release something positive on the 16th of April. But I'm thinking maybe there's just too much negative sentiment because the share price has decreased a fair bit. So if you compare this chart to, say, APA Group, yeah, the share price was in a downtrend, but the 2-day reaction we saw was quite strong for APA Group. And that was a really bullish 1-day candlestick compared to Zips, which wasn't that bullish. Yeah, the share price, you don't see a solid green candlestick. So I'm not sure if this was a trend killer by my definition. Trader Hooper. Now, I did not answer these questions. I don't know if these were questions or just examples, but I'm going to answer these questions. Do you want to do some quick fire questions? And I did not get any really quick fire questions. Hot or cold? Cold. The whole reason I say hot or cold is because it's much, unless you have air conditioning, it's much harder to get away from hot than cold. So in a cold climate, you can just put a lot of clothes on. You can't take off clothes when it gets hot. Well, you can, but then you're going to be naked and you're going to get arrested. So main reason I like cold is just because, now, to be honest with you, being in a colder climate for a while does get a bit old, but then it gets warm and it's so good. I do prefer I do prefer colder weather than hot, just because you're more easy to get out of it. Beaches and mountains easy for me. Mountains by far, mountains. Nice beaches, okay, but by far. Scandinavia or South America, I really want to go to Norway, but I really want to go to Patagonia. I'm going to do both. Scandinavia, I really want to, I say Scandinavia first, but I really want to go to Patagonia. Red or blue? Cats or dogs? Dogs. Sorry, cats. Sorry, Misty. That was my cat growing up. Sorry, but dogs. Now, I probably would have, before I had my 2 current dogs, I probably would have said cats, just because cats are more independent. But I'll also be honest, wasn't as attached to my cat as I was to the dogs. The attachment to my dogs, I can definitely see why they are considered man's best friend, because the attachment there is adopt or shop. Sure. No, either. Whatever works for you. Neither. Neither. Adopt or shop. Now, I did go to a breeder, but that's because my partner wanted to buy from this breeder. Einstein or Freud? Einstein. Without doubt. Einstein. Yes, Einstein. More interesting question would have been Einstein or Newton, and I probably in the past would have said Einstein, but as I learned more about Isaac Newton, I probably would say Isaac Newton. I think he might be the most brilliant mind we've ever seen. Isaac Newton, yes. Scientist or artist? Scientist, yes. Artists? Artists, but artists, scientists, scientists. I would love to see the day where scientists are considered rock gods, like some musicians. In a way, Einstein, even in a way, Hawking, not really. Hawking was, anyway. Star Trek or Star Wars? If I had to pick like a movie, like the 3 original Star Wars movies were really good. Well, maybe not really good. They were good. They're a good guilty pleasure. Even in quality, they're good. But unfortunately, Star Wars lost the plot. The last Star Wars movie, Episode 9, the Disgrace, bringing back the Emperor. Stupid. Anyway, so Star Wars, I do like. Funny enough, I've never watched the original Star Trek show. I've watched all the Star Trek movies. I liked the Star Trek series with what's his name, the bald guy, and Data, and what was that called again? Star Trek Voyager? No, Discovery. No. Star Trek. Oh, jeez. You can see I'm not a huge fan. The original, no, not the original series. Star Trek. The Next Generation. That's it. Never watched this Deep Space Nine. I did watch Voyager. I did like the Next Generation, and some of the newer ones I really did not like. I didn't mind Picard, and what's the other one? Discovery. I actually don't mind Discovery. And the new movies, the first one was, I thought, pretty good. The second one was okay, and the third one, I've forgotten all about it. Anyway, and I also probably should mention, some of the Star Wars TV shows are actually really good. Mandalorian's really good. There was another one I liked. I forget which one, but there was one I didn't like. So hit and miss when it comes to the TV shows. But for me, I don't know. If I could only watch one, I'd probably watch the 3 first Star Wars movies. If someone said to me, you can only watch one or the other, but Star Trek has much better selection. I don't know. Beaver or elephant? Elephant, because they're highly intelligent. Country or city? Easy. Country. Hate cities. If I go overseas, I might go to like a city just because I've never been there before. For instance, when I went to Me and my partner went to, ex-partner went to Europe. We went to Paris for a few days. I think that's an absolute, but I have no desire to go back to Paris. Absolutely zero desire to go back to Paris. I know some people go to Paris every single year. I go, why? Why? There's a lot of reasons why. I don't like cities. There's too many people. And country, you're out in nature. Oh, it's so. And sometimes I can go on a hike. This is the United States. Go on a hike, pretty nice hike, beautiful with scenery, and there's not one single person. Yeah, so that's it. Oh, this one. Yes. I had no idea what we're talking about, Rick Thellion. That remark in question was Vance's remark about Chinese being peasants. Had no idea what he was talking about. And then just after I read this comment for the first time, I saw the video or something about Vance talking about how Chinese are peasants. And I think that is disgraceful. I think that is I think that's all. Yeah, I'm not a big fan of Vance at all. I think just looking at him, that's a horrible thing to say, but I think because I dislike him so much, just by looking at him, I just want to throw up. I think worst case scenario, in fact, if I had a choice between Trump and Vance as president, I would actually go for Trump. I just think Vance is, what a horrible choice as a vice president. Anyway, I've been watching China on the two main cities and the bad effects of Chinese companies that have shut down or trying to dump on domestic market at Hujance's due Trump's tariffs. Yeah, I haven't really been paying attention to that sort of thing. Yes, yeah. So tariffs, Chinese-United States tariff war could really hurt China, USA, both countries, and I think the flow-on effects could be really damaging to the rest of the world. And that's why I'm a little bit confused why the US market is still dropping. So the US market, let's have a look. So let's have a look at I'm going to do this tomorrow in the technical update video. But if we go to NASDAQ weekly, NASDAQ dropped 2.3%. Dow Jones dropped 2.66%. So we definitely saw some weakness in the American markets. But then you have a look at the rest of the world. And yeah, the XJR was up 2.26. So a little bit of a disconnect between a lot of the international indices and what's happened on America during the week. And I'm not sure if I agree with that because a prolonged USA-China tariff war is going to be bad for every single person. Well, maybe not every single person, but you know what I mean. But it's interesting what you've mentioned here that this is really negatively affecting some Chinese companies. Yeah, but it looks like China are just sticking firm. I don't know. Trader Hooper, more Trader Hooper. I've started to adopt some of your good habits and went through all the market sensitive announcements today. All of them, even I don't do that. I do filter by title. Yeah. Just a couple of stocks which caught my attention that you didn't mention, which may or may not be of interest. The BCC, which is Beam Communications, a company I used to follow, but I'm not sure about that company. And LDX, is that Ludox or something? Beam was cash flow positive. I did not realize they released anything. Did I miss this one? I did. I completely missed one. There you go. Okay, so I am going to talk about Beam in another video because I completely missed that one. And the good thing is I usually go through the announcements that I missed. And what I mean by miss is, what's today's date? Today is April 19, so 2021-22. So what I usually do, and I haven't done this yet, is I'll go to announcements. So go to tools. Because on occasion I will miss an announcement like this. And what I do is I go to market sensitive. So I'm filtering out all the non-sensitive announcements. And then what I do is I go to, it has to update soon. So this time of year, what I do, usually at the end of every week, is I filter even further. So market sensitive and then commitments, test, entity, quality reports. So this will show me all the appendix 4C that were released. And yes, I saw Swift Networks, Metal Powder, Ordera, Gathid, AdSlot, and TasFood. I missed Beam Communications. So I'll just go through the rest. So I saw all these, yep, Pentanet, and yep, Sensen, Demem, Narada. So thank you for bringing up Beam Communications. I probably would have found this either tomorrow or on Monday, and then I would have looked at it and gone, whoa, they're cash flow positive. I should talk about Beam Communications. So I'll talk about that company. Probably I'll mention Beam on Tuesday. And what was the other one? LDX. Lumos Diagnostics, yes. Okay, Lumos, yeah, did not mention this one. They released at 10:17 a.m., so that's the reason why, or the main reason why. Lumos, because it was after 10 a.m., after the market opened, usually away from the computer at that point, and usually away for the next 5 hours. Lumos secures key US reimbursement milestones for February DX. Okay, so do they mention a price? Yes, they do. $41.38 per test effective. Do they mention how many tests? Oh, okay, they just secured reimbursement coverage with 2 Medicaid administration contracts. Okay, well, that's actually pretty good. That is pretty good. So what I usually do for these is have a look at the chart. Now, Lumos is not the sort of announcement that will be a catalyst for me buying. Oh, look at the chart. That's the weekly chart. Would not be usually a catalyst for me buying because it's not as high quality of an announcement. That's not a good way of saying it. It's not as powerful as an announcement as a good appendix 4C, or as nowhere near as powerful as a profit upgrade. Profit upgrade is by far the most powerful announcement a company can release. So this is not quite as powerful, and the chart still looks fairly ordinary. Now, Beam Communications has been under stress, and I'll just have a quick look at the chart. And yeah, share price is under 10 cents. So even this chart looks. What happened to the share price? Did it go down? No, it went up 1 cent. Oh no, not even 1 cent. That's 0.1 cent. So on first look, the Appendix 4C looks pretty good, but I have to go through it with finer detail, because usually when I do see Appendix 4C, I will have a look at where the company is operating cash flow positive, and then if they're not, I just move on to the next company. No, that's not absolutely true. If a company is moving closer and closer, increasing receipts and moving closer and closer to becoming operating cash flow positive, even if they aren't, I will take a closer look at that company. But if a company has really low receipts, not really growing receipts, has 0 receipts, I'll just move on to the next company. But in this case, I would have had a closer look at the commentary and anything within the commentary about why they're now operating cash flow positive. Could it be just a one-off, that sort of thing? And maybe they'll talk about that in their commentary. So have a closer look at Beam Communications on Tuesday. And I know I'm going to talk about it because I've got it down in my notebook right now. They do mobile satellite solutions, yes. And I do have a concern about mobile satellite solutions because of Space Link and all that sort of thing. However, the chart is pretty bad and the liquidity is even worse. Yep, only have about 86 million shares on issue. That doesn't have to be an issue for me. Very gappy, such a shame. I really love the 4C, but the lack of liquidity killed the opportunity for me. And Lumos had a really good announcement about getting US reimbursements. Chart is going nowhere. Cash flow negative, but revenue was increasing in January. Markup around 18 million. I'm thinking it's a possible turnaround story, so now I have it on my watch list. Yeah, that's the way to do it. I like your thinking there, Trader Hooper. And also, Trader Hooper, getting quite a few comments from Trader Hooper. Oh, this is about how TradingView sometimes changes how you do things. And I hate this because in the past, when you wanted to put a company on a watch list, you just have to click on the chart itself, the right click, and they had an option here to put it into a chart. And they just got rid of that option. I was like, what? That's stupid. So now what I do is I go up to here, right there, next to the ASX, and there's a little flag. You can actually color code any company. And then right next to that, there's 3 dots, and then you can now add Beam Communications to a watch list. So Beam Communications is in my small cap profitable, which I created many years ago. So Beam Communications was profitable not that long ago, or a few years ago anyway. Anyway, I saw how you added that stock to your watch list. I previously used a right click on the chart, which has been removed recently. Yeah, exactly what I said, and had more tedious way to add charts to watch list. Never really noticed those 3 dots. Yeah, there you go. You're welcome. PTB Fun. Investing related question. What will the ASX top 10 look like in 10 years? Just curious for yours and or anyone else's opinion, sectors or companies. We'll have a look at companies, and what I'll do is I'll go to market index. I've got it somewhere here. Yep, there it is. We'll have a look at the list of companies, and this will list companies by market cap. So the top 10 companies by market cap are CBA, BHP, CSL, Westpac, NAB, Wesfarmers, ANZ, Macquarie Group, Goodman Group, and Telstra. So the main thing I see when I look at that top 10 is a lot of mature, slowly growing companies that won't move much higher when it comes to markup. In fact, some of these probably will move lower. It's interesting that CSL is now well behind CBA. There was a possibility not that long ago that CSL would become the biggest company on the ASX. And I'm going to say that right now. CSL will become the biggest company on the ASX within the next 10 years. Most of these banks will either stay where they are or even drop. It wouldn't be surprising to see the banks start doing nothing much when it comes to valuation. I think there will be some big rises. Wesfarmers, I think, will become bigger. BHP, I wouldn't be surprised if BHP becomes bigger. I do like the management of that company. So the banks will go lower. I think Macquarie Bank has a good chance to become bigger. So I wouldn't be surprised to see Macquarie Group go up. Goodman Group has a good chance of becoming bigger. Telstra Group, I don't think so. Beyond the top 10, which companies I think have a good chance of becoming bigger? Now, Fortescue, Rio Tinto, it all dependent on iron ore. Aristocrat, yes, has a chance. Definitely a growth company, so I think that will go up eventually. Woolworths probably grow a little bit quicker than the banks, but I don't think it'll move much. Woodside, better chance it'll go down than up. Sigma Healthcare, that's going to be the interesting one. They are now Chemist Warehouse, and I just don't know what to think about Chemist Warehouse. I think the company is really good in terms of what they do, but just the valuation of Chemist Warehouse. QBE could be up, could be down. REA Group definitely be up higher up on the lists, and I would think REA Group would be a chance to being in the top 10. Yes, I think REA Group will easily double within the next 10 years. WiseTech has a chance. Xero has a chance. Pro Medicus has a chance. I wouldn't be surprised if in 10 years we see much more growth stocks in the top 10. I wouldn't be surprised at all. So I think there could be a little bit of a shake-up. We're going to see better quality companies in the top 10. Yeah, I'm going to say that. We're going to see better quality companies in the top 10 in 10 years' time. In fact, there is also the chance, I think this is less likely on the ASX compared to NASDAQ. There's a chance there's a company well outside the ASX 200 that finds its way into the top 10. I think there is a chance that's going to happen. And I have no idea what a company is, but if you can find that company, you will do really well. Digi0422 says, I was watching the previous videos from the start of this year, and you mentioned that you liked EZZ. Well, I am a shareholder of EZZ, had been trading it. I sold about 75% of my position because I felt the company, the share price was running up too quickly for my liking, and I thought it was primed for a pullback, but I did not expect this sort of pullback, and now I think there's really good value. And if you saw it drop, you'll take a position. Well, I decided not to sell completely and just maintain a little bit of a holding just in case I was wrong. And if you saw it drop, you'll take a position. I was wondering if you did as it dropped 46%. So what I'm now interested when it comes to EZZ is whether I add to my position and start trading it again. Now, when it comes to trading, it's not really a trade just yet, still in a downtrend, but is it value? Is it of value? Is it really good value? Is that value too hard to ignore at these levels? And I think the other big question is, what is the market seeing that I'm missing? So the market is really negative about this company, but it's just so cheap right now. And if it continues to grow, there's no reasons. Maybe what's happening in China, who knows? Maybe EZZ will be negatively affected by China moving into recession or something like that. P ratio 7.69, dividend yield 2.22%. So they will release an Appendix 4C. My big gripe about EZZ, they don't do enough marketing. They need to sell the company a little bit more. The last significant announcement the company released was a little announcement about a manufacturing partner. That was insignificant. It was just a half-year report. So that was almost 3 months ago. They need to be a little proactive with selling the company. Anyway, so the company in the most recent Appendix 4C was operating cash flow positive. And I think because of their relationship with China, and the consumer in China tends to have a really good first quarter, I think the EZZ might have a really good quarter. And maybe that's a catalyst for the sentiment to start shifting to more positive. But yeah, operating cash flow positive, growing receipts, high margins, many things to like. The only thing not to like is the chart. And we have seen the share price bounce. Got as low as $1.30 and it has bounced a little bit. Okay, Sensei 6011 says, which paid subscription of TradingView do you have currently? They have a renewal offer, but not sure which is best to get. Essential, Premium, over 1 year, that's $190 difference. I have the lowest. I have Essential. I have Essential. I have Essential. It's on special right now, by the way. So I have Essential. So I don't pay maybe $170 a year. 2 charts per tab. Yeah, I don't need more than that at all. 5 indicators per chart. On occasion, that has peeved me off, but I work within that. 10 historical bars. Yeah, so you do get a little bit more with Plus or Premium, but in fact, you definitely go for Premium over Plus because it's almost the same price. I'm going to compare Essential to Premium because I've always compared Essential to Plus. But Premium, would I take $7 more a month? That's probably USA dollars. What else do you get? So you get more charts, more indicators, historical bars, watch list alerts. So I would get watch list alerts. Do I need watch list alerts? Not sure. What else? Chart data export. Yeah, I don't need to do that. Intraday, I don't need intraday charts. Don't need intraday charts. Charts based on custom formulas. Create custom formulas for any symbol on our platform and turn it into a spreadsheet chart. Compare and contrast its symbols of your choice. And then you also get time, price, opportunity, volume, footprint, volume candles, auto chart patterns. That could be interesting. I don't mind that. Second-based alerts, alerts that don't expire, publishing invite-only scripts, second-based intervals. I don't really need that. But on occasion, I've wanted to look at second-based intervals. And what I don't get is tick-based intervals, ability to buy professional market data, first priority support. Is that all worth an extra $7 a month? Maybe. Your question has raised me to think about paying a little bit extra, maybe, just a little bit, maybe. Oh, by the way, yeah, now's the time to buy because you can see how much of a discount Premium is. It's 70% discount. Ooh, that does look a little bit more attractive. But what they do is they get you to pay this for the next year, and then after a year, you go, ooh, I really do need all this stuff. So then you pay the Premium. Okay, you've given me a lot to think about, Sensei. Okay, that's all I have for this particular answer and reply video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.